The big numbers today, SBI, and the market actually reacted positively to those numbers until later in trade when we saw either profit booking or a late realization on perhaps some of the fine print, including the fact that gross bad loan ratio, while it did narrow, SBI has set aside, extra provisions for bad loans. That's around 5% higher than the previous quarter. So I think that perhaps is one of the things markets picked up a little later. But remember, this is the fourth largest lender, controls a fifth of India's loan market, is also a great indicator of the health of India's financial sector. SBI has been focusing on building a pretty strong retail loan book. So let's take a look at those numbers and see how it fared. But it's primarily delivered on most fronts, even though the market still expected more from those numbers. We saw, for instance, if I just take you through, a pretty good, quarterly profit coming in on strong loan growth and also an improvement in margins as well as asset quality. So if we take a look, it reported a 41% year-on-year jump in quarterly net profit. That's coming into a record of 9,113 crore rupees. So that's a record number for SBI. But markets somehow still really not, blown away by those numbers. They were expecting, perhaps up to a 10% loan growth over the year ago quarter. That's what markets were expecting. Let's take a look at the kind of numbers that have come in. We did see net interest income for the Jan to March period up 15% to 31,198 crores. Both the net profit, net interest income falling slightly short of market estimates on profit. Polls expected somewhere more around 9,900 crores or higher. That's what the estimate was on a net interest income as well. The polls saw perhaps a slightly higher number coming in, but the bank did clock in loan growth of 10.3% on year. That's the highest in 11 quarters. So that's a pretty strong takeaway coming in for State Bank of India. We did see those gains build during the day, up about 3% at the higher point of the day at about 477. But later in the session and closer to the end of trade, we did see the stock slip about 2 to 3% coming in as well. Now, given the loan growth, analysts are seeing positive traction for SBI going forward. Their concern was, of course, on whether or not they'll continue to see sustained growth going forward. But this now gives a very healthy sign to the market, visibility as well to the future path on net interest income. Remember as well that, with the heightening or higher rate scenario that we're heading into, that's actually likely to be more profitable for some of these lenders. And SBI on its part has actually cleaned up its books to a very, very large extent. So the loan growth is now a pretty good start. Profit margins also will start to pick up along with that. And that's what analysts at least are looking forward to. Asset quality also did improve, as I mentioned it just a little earlier. Net bad loans as a percentage of total advances did reduce. And SBI saw a 34.5% year-on-year decrease in provisions as well for the 3-month period. So that's SBI. Let's take a look at just any other highlights that I can put up for you on the sector, on the particular stock as well. And other income fell about 27%. So that was another dent. So revenue coming in from some of its non-core products, other income, that was down. And net interest margin, as I mentioned, that also widened by about 29 bips coming in. So those were a couple of highlights from SBI's numbers this time around. Of course, markets look forward to any cues that the management will give in terms of credit demand coming in across segments, asset quality and how that's looking, provisions, and also on margins going forward. So any kind of forward-looking statements that may come out of that press conference, and we'll of course be bringing you that live as well on YouTube.
If you like the video, do like, comment, share and subscribe.